How to lose money consistently in the stock markets. This video is satire and is for entertainment purposes only. After all, I've been underperforming the stock market at a significant rate over the last 2 years. I'm down by about 44% in 2 years after the greatest bull run ever. Therefore, I feel that I have the lessons to give you right now on how to lose money as fast as possible and consistently over the longer term so that you are going to have a miserable time in the markets. So firstly, have you ever heard of index funds? No, me neither. Let's ignore them and buy only individual stocks and shares. After all, 78% of people that are active investors underperform the stock market, and therefore we are now in the majority, and we are also likely to underperform the markets. A good start if we would like to lose some money. We should definitely wait until the next stock market crash, especially whilst inflation is soaring. If we hold all of our investments in cash, at least then we're losing our value to inflation as our spending power decreases over time. This is a great idea as we can also miss out on all of the stock market gains, and therefore staying in cash is a massive win, especially when we think we can time the markets. Just buy high and sell low. By seeing the future, we're able to appropriately evaluate exactly when the market is going to crash and buy just before that moment so that then we can sell at the bottom. After all, timing the market is easy, and we all have a magical ball that can see the future at home. You've just got to remember to charge it up because it does require charging, otherwise it's just not going to work. If we miss out on the crash, it's okay because we can just panic buy, and because we don't want to miss out on our losses. We want to make sure we secure these losses as frequently as possible, and therefore we need to make as much trades as possible. Buy and sell. This is because we want to rack up as much trading fees as significantly possible. We want to be spending as much of our money, therefore losing it, on expensive trading fees. We should look for a broker with very high fees on trading, like £10 per trade, buy a very small quantity of shares and waste a majority of our capital on fees, because that is a secure and easy way of losing money and is absolutely avoidable if we don't do this properly, and therefore we need to make sure we maximize the efficiency of losing money. Furthermore, we need to make use of wide spreads between the buy and the sell price. Bonus points because the most illiquid the stock is, meaning the less people that are trading that stock at any time, the better. This means that there's a greater spread between the buy and the sell, meaning we can buy at a premium and sell at a loss almost instantly. Even better if the stock is so small that it lacks liquidity to even sell your stake, because what's better than losing money? Not being able to sell your position in a stock that is most likely going to zero, as that is a surefire way to absolutely underperform the markets and lose money consistently over the longer term. We should only buy stocks with low share prices. I mean, it's genius, right? We should therefore ignore market capitalization, as it's only the number of shares times by the share price. That is irrelevant. We want to focus on penny stocks. Penny stocks are a sure way of minimizing our upside potential. This is because we're buying a stock for 1 pence. It can only go up to 2 or 3 pence, which isn't that much, and we can more likely lose money by doing so. What a great idea. So if we limit our upside here, we therefore have got a good position so that when going forward and investing in the markets, we are likely to lose more money. After all, we do need to lose as much as possible. We should most definitely buy the first exciting company that we find, because excitement is always good. Investing with emotion is key, because when you're indecisive and you're panic buying and selling, you're likely to rack up those trading fees, and that is exactly what we need to do in order to secure those losses in the markets. It's even better, and we should ignore boring companies, because why would you invest in them? There's absolutely no reason to invest in some water utility company. Who cares? They're boring, right? Surely it must be a great stock if the local drunk on the bus with absolutely loads of qualifications tells us it's a great investment. Therefore, we should follow him into this investment, because he's likely done absolutely no research on the matter and is likely a surefire way of losing money. We should buy only complex businesses that we can't understand. I mean, why would we buy simple to understand businesses? That's too easy, right? If we can't understand these complex businesses, then we can take advantage of the fact that no one else probably can. If we don't know how these companies are going to make money in the future, it's likely that they may struggle to make money in the future, and therefore we're going to be investing in an asset that is likely going to lose us money, and that's always a fantastic thing. Especially if we want to buy companies with accelerating cash losses. After all, we're looking in the stock market to invest in depreciating assets, ones that are going to lower their value over time. Therefore, we can invest as much as possible into it, making sure we're buying and selling rapidly, and make sure that we're going to be losing as much as possible. It's even better if the company has loads of debt and absolutely no cash, because we want them to see them smothered in debt, that they panic and get even more debt, which is a great sign because it means the quality of the company is lowering. There's more debt on the balance sheet and the share price will lower. Or we want to see them dilute shares at an extremely alarming rate so that they sell so many more shares onto the market and dilutes our stake to such a small and insignificant amount, especially at a discount, and we lose even more money. Although this isn't going fast enough, we need to lose our money at a much faster pace. We need to absolutely underperform the markets. Therefore, we need to use leverage. We need to therefore use debt in our own investment strategy. Therefore, we should use CFDs or contracts for differences, or even options. By leveraging our investments, we're able to have a multiplier, meaning that we can only invest 30 times for 1 times the price, meaning we could invest 30 grand's worth only using a grand, and therefore we can lose 30 grand for every grand that we invest, and that is a great method of losing money, especially because it can maximize the speed at which we can go broke, because the stocks can be quite volatile. So bonus points for going for a very, very volatile stock and catching it just before it drops, because we can time the market with our crystal ball. We also need to ensure that we're checking our portfolio every single minute. We need to maximize the stress hormones in our brain so that we are therefore thinking emotionally and not logically. When we're thinking with stress or with emotion, we can therefore panic buy and sell more frequently. We're a much more active trader, and we're much more likely to underperform the markets, thus deeming it a very strong strategy. We need to ensure that we are appropriately stressed out and therefore reacting with emotion at a whim. We also need to invest money that we absolutely cannot afford to lose, because after all, in the case of an emergency, we can just sell our investments at a lower price and therefore not use the money for an emergency and lose even more money. I think we should invest everything, even the house, even the watch. Yes, and I mean it. The cars, the watch, the house, everything. Invest it all. Leverage every single asset you have and gamble it on red on roulette in the casino. We want the added pressure of bailiffs coming to the door, knocking and asking for the money, because this stress is going to act to that emotion. And if you haven't lost the money yet, your wife is likely going to divorce you, and then you'll lose half of the remaining breadcrumbs that you have left as assets, or you're going to lose most of that money in court costs. A surefire way by Foreman on how to lose money in the stock markets.